Top three things in my notebook this morning. Number one, the Japanese yen. Number two, the 10-year bond yield here in the U.S. And number three, our Euro Bull theme, which continues here into 2014. First on the Japanese yen, don't forget that Japan, from a stock market perspective, is closed today. Again, they're getting too many days off, by the way. Looking at the Japanese yen, though, relative to the Japanese stock market, with the yen going up 0.8% for the session, and actually up 2% for the year to date. Who would have thunk that? With the whole free world basically short the Japanese yen. Don't forget that that will have impact on the Nikkei when it opens tomorrow morning, and I think that that might be one of the reasons why the U.S. futures are weak, again, with Japan closed and the yen up. Second point would be on the 10-year bond yield. Big move last week out of the jobs report. So again, it's more about the reaction to the jobs number as opposed to the components of this kind of conflicted and compromised BLS data. We wrote extensively about that both in the early look note this morning and in a note that we posted on the website on Friday. But again, that notwithstanding, it's interesting to watch the 10-year bond yield make a series of potential lower highs here. So again, you got to watch out for that because, of course, that would be bullish for what? It'd be bullish for gold. If gold makes higher lows, there would be a lot to do in that arena. But again, we don't have to make any decisions right here now. Looking at the 10-year bond yield of 2.85%, that's the low end of the risk range, by the way. So don't get piggy. We actually shorted bonds into the close on Friday, both the long bond and the PIMCO Total Return Fund. Eurobulls, the theme continues, and if you look at the growth divergences, which is our Q1 macro theme embedded in Europe, that's really the big thesis here. And as growth diverges positively, and we're thinking slope of the line here in terms of rate of change, things in Europe get better, European stock markets outperform. Top three stock markets in the world for the year to date are indeed European, which would include Greece, up 10.5% year-to-date, Portugal, and Austria, which we mentioned last week. So those are your top three things.